Hello everyone, this is Brother Ovin from Black Concept Group, and I'm glad I'm back. I missed you guys, and in this video I'm going to speak about the US Desire trade that was sent on the premium group. I'm going to speak about the entry, the pair in general, the exit, and why we took the trade. Thank you, and stay tuned for the video.
So guys, this is Jason Stone, the millionaire mentor, guys.
So after that dope ass intro, thank you and shout out to Vincenzo for dropping that out. And continue with the content. I would like to apologize for the people who have been waiting for the videos. A lot of people have been asking out for the videos, and I know that they've been impacting a lot of lives in terms of their trading careers and stuff. I've been getting a lot of testimonials, and I'm glad that the videos are actually working out and doing what I truly love doing. So you guys stay tuned, and this video is actually a very good one, a bomber, and I hope you get to learn a lot of materials from it. Apart from that, I would love also to speak about um, the trading psychology in general. You don't have to give up in terms of your trading journey, because I know a lot of people have been passing through a lot of things. And in my Friday video, I'll be speaking about the questions that I get asked a lot from people in terms of the courage, the consistency. Where do I get the consistency? Where do I get the motive to continue trading and all that? So continue sending me those questions in my DMs, and I'll get into it on Friday. So yeah, continuing with this video, let's get into the analysis. As I've spoken in the intro, this is the video that is going to concern the US Desire trade that was called on the premium channel. I hope you enjoy this trade, and I hope it gives you a lot of insight in terms of trading such exotic pairs and what you should do and the types of actions and advantages that you can take in certain moves, because these pairs are very risky to trade but definitely do pay a lot. So starting directly from the monthly, I want to explain to you guys on a very simple manner, very accurately, so as you guys can try to understand what price is actually trying to communicate to us. Okay, now excuse my voice, I've been having some sort of throat illness. Now starting from the monthly, we can see that this pair has been on a very nice uptrend. We can see that we had this nice break of this last previous high, a very good retest. Price started going to the upside. Now we can say this is a we can say that this is our present higher high, and we can say that this is our present lower high. Okay, or some people prefer calling it a higher low, but lower high makes more sense for me. Now let us just try to study this minor movement here, so as we can know what the market is truly telling us. Okay, from this minor movement, we can see that price has been forming other minor movements of market structure, meaning the higher highs, lower lows, or swing highs. Okay, I remember from all those people that know me, all those people that I've been teaching, you know that market structure is a very important aspect that I used in terms of trading, because in any sort of business, before entering, you need to know the market structure, and that's going to help you sustain the competition or last in terms of any sort of catastrophes and stuff like that. So considering this being a high, came to create our low, came to create our another high, our low, our high, created our low, same low here. We can see that price didn't manage to break this region. Okay, let me zoom in so we can go in together. So we can see that price didn't manage to break this low, so we say that this is the same lower high. Came back to create, we tried to test this previous high, created that high, broke through, okay, broke through and came all the way down to create a low, a high. Then we didn't manage to come check out this low, okay, creating this form of trend right here. You see, something like that. Okay, so we didn't manage to come break this previous low, so we obviously are going back on that upward movement. Now after that, we can see that price tested these highs, that it came down towards these levels to create a let's go on the weekly so as I can show you all. So we can see here broke, came down to create some sort of lower highs to come to the top. So broke that region, came down a retest, created that high. Okay, but you can see that on the monthly, this high was just a test of the previous high. Okay, which is right here. This is an essential high. Okay, so you can see right there. So you can see that on the monthly, price actually just came to test this high, and we had a very fine rejection. Now let us study this movement from this high going forward. Okay, now looking at this movement from this perspective, going to the weekly, we can see that price has been forming a low, created a high, created a low, a higher low, a lower low. Okay, after creating this lower low, we can see that price came back to test this higher low, but didn't manage to break through this previous low, creating a lower high. Then if a break happens of this, that means this is our higher high. Okay, so when you're trading this higher high, that means you're going to get your longs. This is going to be your first take profit, this is going to be your second take profit. Okay, because this is the previous high. Apart from these two, we can see that these two have the same high. Okay, this is the same higher high, same higher high. Okay, or the same high, we can say so. So we can see that price, after creating this, coming to test these previous highs, came down, failed to come all the way to the bottom to continue this downward movement, and managed to give us that nice area around here, which we'll call our lower high. Meaning that if this lower high manages to break, if this leg manages to break this price level, we'll be aiming for the top. Now if you took longs here, this is going to be your first take profit. After hitting your first take profit, the second take profit is going to be the previous high. Okay, from which high is higher than this one. Or you can even say that this is going to be your second take profit, this your third take profit, final take profit to the on the last initial high. Okay, so you can see that this high was taken out, profits were taken. Okay, after profits being taken, you can see that price came down to test these lows. Okay, now till here we can see that price has already given us that nice momentum shift, meaning that we are definitely going to test above. Okay, it has already given us that nice shift, meaning that okay, price has managed to break this previous high, meaning we are creating that lower high, aiming to create another leg higher. Okay, so when you're taking longs after this sort of rejections, again, this is going to be your first take profit, second take profit at the top. Okay, that is why having multiple take profits is important, as we can see that price didn't manage to come top all the way to these tops. But generally, if you're a good trader, you can see that these liquidities were taken out. Okay, this is the liquidity area, and you can see that these liquidities were taken out, and that was far much profits for you to get out from. Okay, now after these liquidities being taken out, we can see that price came down, formed some sort of minimal lower high. Okay, after forming this minimal lower high, you can see that obviously the market the uptrend isn't broken yet. Okay, in this scenario the uptrend isn't broken yet, so that means we are still having that long bias. Okay, but then when price comes up, this is going to be your first take profit in case you took longs. Okay, and this is not the longs that we took. Now after price coming all the way to the top, we can see that we had that fine rejection, and remember this is the weekly, and here we can see that we had that 3 drive pattern. We can see the first drive, second drive, third drive. Okay, now this was a very nice short position. I believe we also took this short position. I called it in the group. I'll track those images and tap them at the end of this video. Now we can see that we had those nice shorts around these price regions. Okay, on the daily, coming down, we managed to create a low, a high, a low, a high, a low, a high. Then we came down to these levels. Okay, these were the previous liquidity levels of price. So we can put them like this. Okay, these are previous liquidity lows. Okay, previous liquidity lows, meaning that when orders enter into this market, we can see a lot of weak rejections. Okay, now you can see this on the monthly. These are liquidity lows, meaning these are areas where orders enter into this market rapidly. Okay, so these are areas that longs are very initial or very important, but then you have to be cautious because we can see that price action has already given us that nice rejection at the top of these highs, meaning that these liquidities were taken out, so shorts are still in play. Okay, now if you have taken these shorts, that means that after watching this market structure, our second take profit would obviously be at this price level. Okay, second take profit, because this was a high, a low, a high, a low, a high. Okay, so that means the take profit is here. This is the take profit that you want to be looking at. Okay, right here, the previous low. After this, that's when we come down to this price level. Okay, maybe that what we're anticipating is price could definitely do something like this and continue to go on its upward movement. Okay, but for now we have rejected this upward movement. This is giving us a significant signal that bears are taking over the market. Okay, now going to the weekly again, we can see that these liquidity lows are the ones that I've been speaking about. We can see how they were tapped and price rejecting those levels. Going to the daily, now let us speak about this movement here. We're done with this movement. We can see what the market is actually trying to tell us. Okay, we can see this upward movement that was broken here. This managed to remove that upward movement. If this closed above and came down, maybe tested these levels, that's no problem. That means we'll be looking for longs to hold them for a very long time. Okay, but in this case, we can see that price didn't manage to break these highs, so that is why this level is important for us to know that bears are already into the market, and this is the region where we took our shots, if I'm not mistaken. So I'll try to attach images of these shorts and the longs that we took around this price area. Now with no further ado, let's just continue going on. We can see that the market created this low, came to the high, lows, highs, lows, highs. We're having a very fine downtrend, but remember, this is the region we are looking for. Okay, now we came to create this low, came to create a high. Okay, assuming that the market will continue going lower, but you can see that price rejected this price level. Okay, we can see that fine closure of price. So this was just a fake out when we go to the H4 or whatsoever, but sincerely speaking, we can see that price was still on that liquidity level. This is the first region that orders entered into the market. That's why we're considering this candlestick. Okay, now continuing, we can see that price managed to go up. Okay, going up to form that this was the higher low, lower low, higher low, same lower low. Okay, same lower low. If price managed to continue going above, that means you're on that uptrend, but price ended here, creating that lower, a higher low, meaning that we're still on the downtrend. Okay, now coming on the downtrend, we can see that price formed that lower low, came rejected this level, okay, trying to fool people about this head and shoulder, inverted head and shoulder, okay. Now you can see that price formed this level, rejections happened, price went above, but then rejected these levels of liquidity which are around this price region, these highs here, okay. We can see those levels were rejected, then price continued going down, formed the same lows, okay, managed to break, tested these around these areas, price went up, okay. Now this shows us momentum slowing down, okay. This shows us momentum slowing down, that if bears were on that advantage of the market, why weren't they able to come and tap these regions? At least try to tap these liquidity areas because they are firm. Remember that we have had attempts since September this year. We have had another attempt on October, okay. Now, why didn't price manage to come and tap these regions again? So this gives us the significant information that bears are trying to lose some sort of strength anytime bulls could strike, okay. So now we didn't watch the market this pair during this price level, this price movement, but you can see that price came, tapped those levels, tapped again these lows, it tapped these lows, okay. After tapping those lows, we can see that price made another low here, another high, sorry. Price created that high, okay, created that high, tapped these lows, came all the way to the bottom. But remember, this is around those liquidity regions. Orders entered into the market, boom, creating that high, okay. After that, we can see that price managed to break these lows. Now, remember what I told you about this small information giving us the overall picture that bears are trying to move bears are decreasing their momentum. Why? Because we are close to this liquidity area, okay. We can see how this liquidity area managed to handle all these bulls, all these bears, and gave us that nice bullish movement, managed to handle all these bears and give us that nice impulsive bullish movement, okay. Now the same thing that we were supposed to happen around this price level. Now we can see that after price forming that a low, a higher low, a low, a higher low, the same low, a higher low, the same low, a higher low, then boom, a lower low managed to appear. Now in this case, that means if you want to go against the market, because this has already showed us that nice movement of bear domination, but momentum was slowed down around this price level, okay. So at some point this break was inevitable, okay, but would still take advantage of this level of liquidity, meaning we know what price mostly does around these liquidity areas, okay. That is why we took the long. Now going on the H4, okay, going on the 4-hour, let us try to study this price movement. All right, we can see that after price creating these highs, managed to break this previous low, we can see that it came to create the high, came down to test these liquidities, boom. That was a nice impulsive move of bulls after price tapped this liquidity level. Now after tapping these liquidity levels, we can see that price just came to test these highs, yeah. After price tapping these highs, we can see that price came down, didn't manage to close below this level, okay. Simple market structure. They managed to close below these levels, right? Now we can see when price they managed to close below these levels, we waited now for price to continue going to the upside, okay, and this is where we took our longs, okay, right here. This is the region where we took our longs, okay. Now let me take you down to a smaller time frame so you can look at this and understand why. All right, so we can see that price came to test these highs. We can see that price came to test these highs, meaning that if this was the previous high for bears, okay, if this was the previous high for bears, if bears still had that nice momentum, bulls were supposed to be taken out here. We were supposed to see that nice movement of bears to continue going down, okay? But this already shows us that nice slow momentum, slow rate momentum of bears, okay? Meaning that bulls are entering to the market with full force. Why? Because we have tapped these liquidity lows that have been rejected 2 times over the previous months, okay? Now, after tapping this region, we can see that price came. If this level managed to even tap below these price levels, then we would expect price to come back above, maybe try to tap these areas, these highs, okay? Then give us shorts to continue to the downside. But that was not the case. The case was this area held. The liquidity lows that have been holding for over the previous 2 months that have been tested there have been holding well. Now we're expecting this third move to hold well, though we know that the overall trend or the overall bias is bearish, okay? We can still take advantage of that movement. Now, after seeing this rejection, this is the region whereby we took our longs around here, because you have already seen that nice H4 closure, H2 closure, okay? I believe in the H4 we had a nice closure there. Yeah, we can see that nice H4 rejection. Price went above. Now this is what price does, okay? Simple market structure. We can see that first attempt, okay, up, came, created this low. Let's go slowly. Okay, created that low, created the high, okay, came down to these lows, okay, didn't manage to break these previous lows, okay. That means this is already an uptrend starting, okay. Then price came down, came up to test these previous lows, okay. After testing these previous lows, that means now this is the region we're expecting to get an entry, okay. Why? Because we have already seen this nice rejection of price, okay. Price couldn't suddenly just poof, maybe give that impulsive move to the upside. No, at least because this was a very nice bearish movement, okay, bearish movement, a very slightly significant bearish movement that wouldn't be just be taken out by one impulsive move, okay. We had to find some sort of struggle and market structure to form itself in order to support that momentum of bulls. And all the people that I teach privately, I tell them what the type of trading that we want to trade is institutionalized and a trading style that goes with momentum. So whenever you trade with trades that are going with momentum, then you won't be left on the on the drawdowns for a long time, giving you that nice appetite of holding a trade and knowing what exactly you're doing. So after price coming down to these lows, created the highs, surpassed those lows, okay. This on the minor time frame is a nice downtrend, okay. Surpassed those lows, but this rejection here gave us this significance of taking these lows, because we can see that price came and tapped these liquidities, okay. Those are lower time frame liquidities. So I'll show you the image. This was the entry price. Now this is the region. We had also another significant signal for us to continue holding this trade, another significant signal for continuing to hold this trade, and boom, we had that nice movement to the top. And remember, this is the region we are going to get out. Why? Because we know in the higher time frame, that is the high, that is the previous high, okay. This is the previous high. Remember, this is the previous high, because we're on that nice downward movement. So this was the previous high. We had to take out these, okay. After taking out these, then shorts will continue to go down. Now we can see that shorts managed to enter immediately after us moving out of the trade. We had that nice retest around this price level. Up, price continued to go down with a decrease in momentum. So right here, we're still waiting for an area to go long, okay. I can still see price moving further down if maybe we just do this, you can see same distance, we expect this nice movement towards these price levels, and I'll show you the magic here. So we're expecting to at least reach these levels, okay, then get a move like this, like insignificance, meaning showing us that decrease in momentum, okay, price pop moving here, moving to the top, giving us that nice momentum entry to continue going above, okay. Now it doesn't necessarily always have to be the case, but updates will be given in the premium group, also in the free group. Now let me show you the magic behind this level here, okay, why I'm expecting price to tap that level. I'm trying to fix the time here, at least let's get us 30 minutes. Now going on the monthly time frame, okay, we leave that there. Going on the monthly time frame, let us just try to study price action, okay. We were studying market structure. Now let us just try to look at price action really quick. You guys, I'll be going fast, but I believe you'll be able to catch up. Now we can see the highs, okay, the highs, the lows, the highs, okay. Now on the lows, remember what I said on the previous videos, try to look at the opposite candlesticks on that uptrend. We can see that this on that specific trend, we can see that this trend is an uptrend, okay. Now this level, we can see that bears managed to come all the way to the bottom, okay. Remember, I'm not considering this. Why? Because these are the regions whereby the trend for an upward movement were significantly shown, okay. This shows us a very nice downward movement, okay. But then here we had those rejections, okay, around these price levels. This is where we had those rejections showing us that movement is going to the upside. That is why we're going to study this price action here, okay. I hope that makes sense. So that is why we're going to study this price action here. Now we can see price forming that upward movement. We had that high, okay. After tapping these highs, buyers entered into this market, okay. But after reaching this price level, this is where bulls put in their orders, okay. We are together there. So this is where bulls put in their order. After bulls getting into the market, they tapped all the way to the bottom, to above, okay, above these highs. Now see how this candlestick is very significant above these highs, okay. And price of sorry, so that means that when bears came here, the market opened, okay. When the market opened, it came down, and this is the region where bulls officially entered into the market, okay. We can see here that this is the region whereby bulls officially entered into the market. Let me repeat that again, okay. We're going to study this price action here. Why? Because this is the region whereby we see the rejections and confirmation of that upward movement, okay. Remember, this was a nice downward movement, but then why did price not manage to break this level and continue going to the downside? That is why we need to study this price action to give us that nice the nice zones that we are supposed to take a keen action to when price manages to tap such areas, okay. Now price forming that upward movement, we can say that bearish orders entered into the market here, right? When bearish orders entered into the market, price coming down, okay. Now remember, from the past videos I told you, look at the opposite candlestick. This is the opposite candlestick in this movement, right? Now let us look at the previous and the present candlestick, okay. Now when bears managed to come all the way to the bottom, creating these lows, okay, we see that bullish orders entered, whoop, came all the way to these price levels, okay, managed to close. Then when the market opens, bears tapped this region, and this is where bulls officially entered into the market, okay. This is where bulls officially entered into the market. giving us all that move to the top to this region. So that means this is our level, this is our zone that we're going to be considering, okay, this level. And if you would love to be considering another key level is when bears manage to go, bulls manage to topple this region here, we can see that bears entered here around this price level, okay. After entering to this price level, they came all the way to the bottom, but then closed here and bulls continued with their movement. So this is another level that we are going to be considering, okay, right here, okay, the opening and the closing. That is where you can see the magic of this, why I'm expecting price to come and tap this region. So this is the zone that I'll be drawing. Okay, so you can see how that the boxes were almost going to significantly be on the same zone. Perfect. Okay, so this is the price level I am targeting right there. So yeah, that is the USD ZAR trade broken down from the monthly lower time frames. You can see I've spoken about the market structure, I've spoken about the price action, reading price action precisely, and not all that textbook knowledge that is obviously outdated with the market conditions that have changed, have been changing with the economy due with time and progression of people, technology, and everything. So the textbook knowledge is legit, but after some time it is outdated, so you have to adapt and know how to read price action precisely and learn what price is actually telling you. I'm meaning about the story that price is actually wanting to tell you about what it's going to do next. So I hope this video will be very beneficial to you, and yeah, catch you up later.